Good morning, traders, and welcome to the free Elliott Wave Street weekly update. I'm Juan Maldonado, and I'm going to share some wave counts and some trading plans that I have for this week. Also, don't forget to read our disclaimer at ElliottWaveStreet.com, and also we have this membership where you can receive my daily analysis on different markets. All right, traders, so this is the euro. Let me show you the big picture. After checking the waves, look at all these strong turns that we have been seeing lately. Have been pretty strong, all these movements, where we have a leg up, a leg down, a leg up, and a leg down. What a crazy price action, right? So it seems that from the weekly chart perspective, our wave 2 ended as a flat, as an ABC flat. And we are now in the wave 3 blue. The wave 3 blue targets around the 1 area. And of course, the plan is to see a breakout of that area. We can go to the 98 later this year. But right now, I want to focus on finding the end of the wave 1 magenta. Because if the wave 1 magenta it's done, I want to buy the wave 2. Let's go to lower time frames to understand better the momentum. On the hourly chart, so far we have a 3-wave sequence up. That's it. That's what we have. If this is the bottom of the market, it will be like a W pattern. What we are going to look for in terms of Elliott wave is to see a 5-wave sequence. So actually it could be a leading diagonal wave. For example, this could be the wave 3, this could be the wave 4, and this could be the wave 5 as a leading diagonal. And then we can wait for a 3-wave sequence ABC. And once we see the ABC, we can add a trend line and we can start buying if the price fails to make a lower low. So that would be like the main scenario. An alternative scenario that I'm thinking is that what if the price is building a 3-wave sequence over here and it's going to make a lower low and the wave 1 remains active. Right now, that will be my ideal scenario, because if that happens, if we have a lower low, once the price reverses right here, I'm going to place my buy stop order in order to get into the bullish trend. Right, so that will be my favorite way to trigger the trade, if only if the euro makes the lower low. Now let's have a look at another favorite, is the dollar yen. The dollar yen is going up. We are seeing the price on the dollar yen going up while the S&P is going down. Usually the dollar yen in the big trend, in the big picture, follows the S&P, but that's something that we are not seeing in this market cycle. Pretty interesting. All right, so here's my plan. I think that the dollar yen this week could very easily reach the 112 area. And if we have the price moving above the high and then showing a candlestick reversal pattern, bearish engulfing candle, evening star, dark cloud cover, we will see which one is gonna show the price this time. That's going to be a signal to sell the dollar yen. And the minimum target would be the previous low. Actually, this trade is now like a big trading range trade, where if the price fails to break out the resistance, we can go down back to the 101 area. So this is another favorite for the week. I'm going to focus on finding the end of the trend in order to sell the dollar yen. Now let's have a look at the S&P. The S&P, I have some big news for you. Let's have a look at the weekly chart. So on the weekly chart, we finally might be close to the bottom of the market. Not yet, but we are getting closer. So Elliott wave is not going to tell us precisely where a market cycle is going to end, but it's going to tell us once it confirms that was the bottom of the market. So those are two different things. Some people think that Elliott wave will tell you precisely where the market is going to reverse, and that's a lie. What Elliott wave does is that shows us the actual market cycle And once we have a 5-wave sequence up and then a 3-wave sequence down, we are going to know that that's it. But I'm very optimistic. I think that we are getting closer to the bottom of the market, more than the situation, the emergency that we are living, more than a cure or something big for that, is like the Fed doing a lot to provide liquidity to the markets. So that's going to cause an impact. Maybe not yet. Maybe we can have a couple of new lows after the accumulation phase. You know the Dow theory that tells that during the bearish market, during the panic phase, we are going to have some accumulation, and we are starting to see that on lower time frames. All right, so the main scenario is that if this is the wave 4, we are going to start seeing the wave 5 going up. But also could be an alternative scenario where at the first cycle will be the same. We can go back to the 3,400 area, and then we can go down similar to this previous wave 4 green, this pattern. Something like this is the one that I'm thinking that is going to happen on the S&P. But for now, on the lower time frames, we don't have a reversal signal yet, but it might happen the bottom of the market if the price completes this wave 5 over here, and if it loses momentum and it reverses, that will be our first buy trade on the S&P. That will be the first buy trade. However, if, for example, happens a red candle like this one over here, that goes to below the 2000 area, whatever, and adds momentum, we are not going to try to buy the S&P. Only if the price moves lower and then reverse, losing momentum. That's going to be the signal. And look, all the accumulation that we are seeing here on the S&P. It's like a wedge. So the Fed comes out with good news and the price goes up. Then bad news because the emergency, and the price goes down. Then the Fed comes up again and the price goes up, and we are seeing that cycle. The last one was with this last news on the Fed of the QE program, and good news and then bad news. So this is accumulation. This is where the big guys are buying, where the market is using the liquidity to start buying the index. They don't care if it continues lower. They don't know when and where it's going to reverse. We don't know that either. But look, if the price makes the low and reverse, and then we start following everything with Elliott wave, a 5 up, a 3 down, wave 1, wave 2, that could be the bottom of the market. All right, so let's get ready. It looks pretty good. Now let's have a look at oil. Oil is going down. We are seeing on oil the price going lower. That's pretty good because it's what the market is telling, what the trend is telling. In terms of demand, oil needs to continue lower because there are no flights almost, canceling a lot of flights, people canceling their trips, people are staying at their homes, so they are not using their cars. So of course, from the demand point of view, we have a pretty strong reduce of the demand. But what about the offer? The offer is still steady, maybe growing. Are the big countries, the big producers, are going to do something to stop this trend? If they do, it's going to be enough to compensate the lack of demand? Or it's going just to be sideways if the big countries do something? If they don't cut the supply, the price is going to continue lower, slowly but lower. But if they do something, it might go sideways, or we can have it around the 30 to 35 area, and that's it. Because then we will need to start seeing demand in order to have oil going higher. Really complex situation on oil from my Elliott wave point of view. I think we need to continue seeing a couple of new lows before we have any reversal attempt. Now I want to invite you to ElliottWaveStreet.com. Visit the membership tab and start getting our daily wave counts, daily trade ideas, daily videos. So just to visit Elliott Wave Street, click on the membership tab, and here you can pick your plan. We're offering a first month trial for just $19 the first month, then $75 per month. Here you can see all the details, all the instruments. Please have a fantastic trading week. Stay safe at home, and I'll see you soon with more Elliott wave counts. Take care. Bye-bye.